Yo guys, before we get into the video, we just want you to see this 30-second clip and see if it sounds familiar.
When the ball drops on the year 2000, it will be a momentous event for the world and for the U.S. economy, which is closing in on its longest expansion ever. The decade has been marked by strong growth, the lowest unemployment in a generation, and yet remarkably little inflation. Well, tonight we ring in a special Millennium series here on Moneyline, The New Economy. Is it a boom without end? Over the next 2 weeks, we'll cross the country trying to answer a key question. Has the 1990s boom shattered old assumptions about how the economy works and how fast it can grow?
Yo, what is up guys? It's a Market Monkey here, and today we are talking about electric vehicles. And guys, I mean, honestly, this is not looking good. I mean, electric vehicles are a massive bubble. I mean, if you're in an electric vehicle stock right now, I mean, just get out. I mean, this is crazy. It's the next dot-com bubble. I mean, Sam, what have you got to say?
Yeah, you just gotta get out if you're in the EV market. Like, you gotta put your money elsewhere, even keeping your money in cash. You just do not want to be part of this bubble because you will get burned. You're going to be what's called a bag holder. That means you're going to be holding on to the stock when it's losing a lot of money. We're going to go through some finer details here throughout the video, but the main point is the top level here, get out of all EV stocks now, today, right now. If you have EV stocks, go into your account and just sell them all.
Coming to this next slide, where this is kind of like the year to date, which means how much the company's increased in value in the last year to today's date. And I mean, these values just, I mean, don't make sense at all. I mean, like 1,500%, 500%, 163%, 700%, I mean, 1,300%. I mean, Sam, break down this further.
This is insane for companies to be growing at this rate when they're not even producing anything. Basically, what's going on is any car company that just claims they make electric vehicles or they have any type of prototype like Nikola, a lot of people are getting burned on Nikola right now. Basically, they just have a paper, that says, oh, we're going to make electric cars. Guess what? That's now a $50 billion company, according to these EV investors. It's a huge bubble. You're going to get burned on it. You got to get out. We're going to go into some stocks here that's going to compare this EV bubble to the dot-com bubble. We know a lot of people who watch our videos weren't alive during the dot-com bubble, so they don't understand what happened. But basically, all of these companies, right, during the dot-com bubble people were investing in all kinds of stuff. They're looking at any website, right? They were going to invest in pets.com. They were going to invest in pretty much any website you can think of was just going to be a multi-billion-dollar company. And what happened is people realized that wasn't the case, and lots of people lost a tremendous amount of money. We're talking on some stocks down over 95%.
I mean, here is the NASDAQ, which is kind of like, it tracks traditional technology companies. And I mean, here it is at the dot-com peak right here. And you can just see the absolute just dog pile of this thing just going plummeting straight to the ground. I mean, this is people with their savings accounts. This is people with their retirement accounts. They're getting sucked into this and they're just losing everything. I mean, NASDAQ, as we'll show you later on, didn't recover from this peak until 15 years later. It's absolutely crazy. I mean, here is an example of a stock that was, it's called Priceline. And this is one of the few stocks you would have found in the dot-com bubble that actually has come out, not going bankrupt, but actually worth something now. I mean, you can see it here. This is just when it first was created, when it had its initial public offering, which means when they first sell shares to investors. I mean, it shoots up, and you don't see this return to its price until, I mean, we're looking 2013, 2014. This is 14 years later. I mean, it's absolutely crazy. I mean, Microsoft, Sam, this is one for you. Let's just hear it.
Yeah, think about Microsoft, right? In the 90s and 2000, if you're going to pick any company, right? If you're like, Microsoft is a winner, right? Microsoft is one of the winners that survived the dot-com bubble, okay? But even Microsoft itself took over 15 years to reach what it was in market cap in the dot-com bubble. So basically it flatlined, it dropped, about 50% after that, and it flatlined for 15 years. And this is Microsoft. People use Microsoft products every single day of their life. It's one of the largest companies in the world. It's actually the second largest company in the world currently. And even Microsoft itself wasn't immune from the dot-com bubble. So when you're looking at these EV stocks, and you think, oh, well, Tesla, it's too big to fail. There's no such thing in a bubble of too big to fail. Especially
Yeah.
a company like Tesla doesn't actually produce that many cars. We have a video coming up after this specifically on Tesla. But with these smaller EV companies, you're not talking about 15 years to come back. What you're talking about is outright bankruptcy. You're talking
Yeah.
about 99.9% losses. Talking about kicked off the exchange, you can't get these stocks.
Yeah, absolutely. I mean, here's another stock example, Cisco. I mean, Cisco really is the Tesla of the dot-com bubble. Cisco, they were making the internet. They were installing, internet cables. They were putting up towers for internet, and everyone was talking about Cisco being the future. And you see Cisco reach this insane market cap, and they were actually the largest company in the world at one stage. And I mean, look at this. The dot-com bubble happens, and they never recovered from their peak in the dot-com bubble. It's just insane. And I mean, you can go look it up online. Go look up articles from the 90s. People are talking about Cisco being the future. It can never fail. It's just going to be huge. And I mean, look at it now. It's insane. It's insane. Like, analysts were saying to buy it. Like, it's just insane to me. And this is another stock, Pets.com. I mean, this IPO right before. As I said, IPO means when they first sell the shares to people. This IPO right at the dot-com burst, and look, I mean, it literally goes bankrupt. Pretty much a year later, you would have lost all your money investing in this. It's just insane. This is another company, Webvan, are just absolutely losing all its value. I mean, these are companies like these EV stocks. They're not offering anything to investors. They're not offering anything to consumers, but people just look at them. They think it's an EV stock, it's got to be the future. It's the same thing that was happening in the dot-com bubble. People looked at the stock, it's an internet company, it's the future. And look what happens, people just lose. It's just unfathomable. 100% of their investment.
The thing is, we're not even talking about them being wrong. They weren't wrong in 2000 saying that the internet is the future, right? We all know that we all use the internet every single day of our lives. It is the future. It was the future. They were right that it was the future. Just like you can think electric vehicles are the future. I mean, most people would admit, even the most fervent anti-electric vehicle people, that the world is heading towards an electric vehicle future. But that doesn't mean that we're not in a bubble and it's not going to crash. You can't have these inflated values. When you're looking at companies, you can't just throw away these ideas of how you value a company. You have to look at price to earnings ratio that we're going to get into in a little bit here. You can see right here. When you hear people talking about EV stocks, when's the last time you heard them refer to price to earnings ratio? And a price to earnings ratio, what that means is it's the price of the stock versus how much money in profit that company makes. So you want a company with a low price to earnings ratio. The lower the price to earnings ratio is, means the more money that company's making per share. So these companies are just throwing out what the fundamental idea of how we value stocks are. It used to be the price to earnings ratio, but you don't hear about them talking about the price to earnings ratio. When you look at companies like Apple, for instance, they have a price to earnings ratio of 35, which is about standard for a tech company. But if you look at auto manufacturers, Toyota has a price earnings ratio of 16 to 1. And if you look at a company like Tesla, their price earnings ratio is 1100 to 1. That's a huge price to earnings ratio. It's unbelievable these are being valued as highly as they are.
Yeah, and I mean, a big thing for the dot-com bubble is people talked about how many visitors people had to the website. And you see that sort of today with these EV companies, is people are talking about how many cars they're making or how many cars they're delivering. They're not talking about how much the company earns. And then just the traditional valuations are just gone. And these things are important. We're not saying that EV cars aren't going to be the future. We think they are. But picking the winner or picking the company that's going to kind of wade its way through this EV bubble, man, good luck. It's next to impossible.
So what's going to happen is you're picking, there's like, let's say there's 10 EV companies, electric vehicle companies, and you know only one of them is going to come out on top. Putting your money into 10 companies knowing 9 of them are going to go bankrupt, and even if the 10th company is Apple, you actually are going to come out behind in that deal compared to investing in like an index fund or a more traditional fund.
Yo guys, I mean, so if the only thing you take away from this video and you just ignored everything else we said, I mean, honestly guys, you have to get out of this EV bubble, guys. It's not if, it's when with this thing. It is going to blow. People are going to lose their money, retirement savings, people's savings accounts, people's futures. I mean, guys, yeah. So you guys be watching Market Monkey. Thanks a lot for tuning in. Make sure to sub, check out our Discord, and that's all. Thanks.